Very warm good evening, students. Welcome to the live coaching classes organized by Board of Studies ICAI. First and foremost, happy Dhanteras, happy Diwali for all of you for listening to me online. So, as a protocol, students, let me have confirmation from some of you. You're able to listen me. You're able to see my presentation properly. Once I have a confirmation from some of you, I will go forward with our today's topic on this evening called registration under GST law. It's a quite long time since we have discussed together the topic on GST. Thank you for the wishes, Shailesh, Manan, and thanks for the confirmation, Rahim. I'm doing good. Happy Diwali, and yes, thanks for the confirmation. So today's evening, we have this wonderful topic called registration under GST law, where I'm going to make you walk through some of definitions under GST. As we discuss these particular provisions, I request all of you to have this institute material in handy, chapter 8, which deals with your registration chapter. I make you understand some definitions from registration perspective, what is that we need to study, and what is that we have to take forward for our examination point of view. I'll give some of examples where we will apply this topic called registration under GST. Examination point of view, you can expect one 4 marks problem where they will ask you to examine the provisions of section 22, 23, 24, read with the relevant rules, why registration is required, and how you are going to use this particular topic called registrations under GST law. I take you through the respective registration provisions, how it will help us in day-to-day understanding. Procedure for registration, I'll not go in depth of the procedural aspects, but relevant aspects, whatever required for you to understand, I'll make you to have a better understanding. There is a topic called amendment of registration, cancellation of registration, revocation of cancellation of registration. All these are ancillary topics. How I apply for registration, make an amendment to the registration, cancellation and revocation of cancellation, and some of important points at the fag end for our today's discussion. So this is going to be the structure of our today's discussion on the topics what we're going to discuss. As usual, I make you understand certain aspects why we need to study this, how it is going to help us in terms of understanding our topic called registration under GST law. To start with, registration is a basic aspect where we will introduce the taxable person to the department. Taxable person gets introduced to the GST authorities. Now, appointing time where your business requires for you to get registered under GST. The reasons why I get registered under GST, probably I would have exceeded a threshold of turnover for which I'll take a registration under GST. Or probably I would have taken a voluntary registration. I could have taken a voluntary registration for availing the benefit of input tax credit. Or probably your nature of business is like, say, TDS or TCS, where you're a government undertaking, you're a public sector undertaking, where as per the law, all the supplies received by you, on which you pay GST to the supplier, government has notified you that you should recover something called TDS. Or on an e-commerce platform, if someone conducts a trade, TCS is something which needs to be recovered. Probably you could be a kind of person where you think that I wanted to do business on a part-time basis or on a seasonal basis. Like example, Dashara, Diwali. Now, Diwali is a point in time in North India where sweets are purchased as a one of the main essential commodity. Now there are multiple people who incorporate their business only for the purpose of selling sweets during the occasion of Diwali. Entire 12 months, they do business only for 2 months. Probably I would be registering myself as a casual taxable person. Or there could be a business scenario where I'm a non-resident, but I wanted to do business for a particular activity in India. I would call myself as a NRTP. These are the mode of registrations which I try to examine why I want to take a registration. Or alternatively, you could have been a special person like UNO, United Nations Organization, World Health Organization, International Labor Organization. These are all special organizations where they are operating in India, where they receive input services or goods in the process of their existence in India, on which they would like to claim a refund of GST. Probably these are some of registrations which we try to invoke in our day-to-day business aspects. Now, these are various aspects which are connected with my registration under GST law. First and foremost, to discuss this particular topic called registration, we need to understand something called triggering point, where section 22, which talks about the turnover threshold limit. Based on a turnover of 20 lakhs, like as of now, 10 lakhs for special category states, 20 lakhs for other states, and 40 lakhs exclusively for goods. There are various limits specified under GST law, wherein if you do a particular activity on the basis of your aggregate turnover, you would be required to get registered under GST law. Or probably on the basis of nature of business, my registration would be required. Like example, I was explaining you TDS and TCS. Assuming for a moment, I'm an e-commerce operator. Say, Manan, me, and Rahim, all three of us are good in technology. Like there is a information technology platform wherein we create a market for suppliers. People can come, list their product, sell their product, and can get the money collected for the products supplied. So I could have an online platform, which I call myself as an e-commerce operator, where TCS comes into picture. That could be the nature of business where my registration needs to be required under GST law. Process overview. Now, you would be examining the nature of business, wherein, for a moment, let's take example of a GTA, Goods Transport Agency. Goods Transport Agency, we have a choice wherein not to register or to register. If I don't want to register under GST, my rate of tax is 5%. If I want to register under GST, my rate of tax is 12%. So I could be a goods transport agency wherein I try to take a shelter wherein, sir, I have a very limited manpower source. I don't want to get complexity of my business model. So I don't want to pay GST, wherein my rate of tax is 5%. I would not opt for registration under GST law. Or probably my business is of such a fashion where my customer says, please take a registration and charge us 12%. Why? The benefit of input tax credit can save a cost of operation to my service provider. On the other hand, you have on the basis of complaints and consequences, you would try to recommend what sort of registration is required, whether regular registration or whether casual taxable person registration is required. Like I'll give an example of a works contract supply. Works contract supply. I am a service provider where I go to a particular customer premises, I do a construction activity. Let's take example. Wherever I do a construction activity, I need to have this uh, material management. Then we need to have this particular machinery which are required for my works contract supply. When I use this particular machinery, I would try to take a stand. So I want to have a warehouse centralized at one place, or I want to have a decentralized warehouse. Let's take an example for a moment. Manan is from Maharashtra. Manan wants to undertake a works contract for construction of a particular building. So when he wants to buy steel and cement, he would say, when I buy steel and cement, I need to have a warehouse for storing those materials. If I do a work in Karnataka, I don't have a warehouse in Karnataka to store that particular material. So I would take a call whether to go for a regular registration or whether to go for a casual taxable person registration. Last and final, closure of cancellation. Like a point in time where I decide whether I need to continue with my business, where there's a discontinuation in my business. Whether when there is a discontinuation in my nature of business. So why is that your business is discontinued? Probably I'm a proprietor wherein my like on death of a particular proprietor, the business has to discontinue, or there is a demerger of a particular business. When on a going concern basis, there is an entity, like assuming there are entities A and B which are operating together. There was a merger of these two entities A, B, which come together as AB. Just give me. I am a business operator wherein there is a discontinuation on account of succession, maybe on account of merger, or any other mode where I would like to go for cancellation of my registration. Why is that required? Probably business is not happening, or various other reasons I would like to discontinue my business. That point in time, we talk about cancellation of registration. So these are various aspects which are connected with my topic called registration under GST law. Now, there is first definition under GST law. Come to your institute material. Page number 8.3. There are certain definitions which are discussed every chapter, students. If you see your institute material, before they start with the main topic, they explain some important definitions and then they come to the main topic of that particular relevant provision. The intent of this particular coverage is that when you read this particular chapter, certain definitions are going to be helpful for underlying your concepts, why this particular chapter has to be studied, how this particular definition gives a clarity to understand the concept for its implementation. So from that particular point of view, these definitions are pretty important. So first among them is your agent. The definition of agent means a person including a factor, broker, commission agent, arranger, liquidator agent, auctioneer, or any other mercantile agent, by whatever name called, who carries on the business of supply or receipt of goods on behalf of another. So here they have given a reference to supply. There is a person who carries on the activity of supply on behalf of another. This another person is termed as principal. And reference to section 7, which deals with your supply, read with schedule 1 of CGST Act, where there is no consideration, then supply of goods or services between principal and agent are considered to be a supply under GST law. From this particular point of view, the relevance of this term called agent is important. This term agent is important. I'll just give you one example. How we use this particular term agent in our day-to-day life. Just keep in mind, students, like generally tax laws are going to define how business structure is going to work. Prior to GST, post GST. Prior to post. Prior to GST, sale of goods. Exception for principal to agent. Post GST, no differentiation. Now, this aspect of principal agent is one of the widely used and adopted business model in India. Under erstwhile VAT or sales tax law, there was no sale of goods among principal and agent. So what used to happen? Assuming for a moment, let's take example of L&T Cements. L&T Cements have appointed dealer A, B, C. The manufacture happened on July 23. Transfer from principal to agent happened on July 23, August 23, September 23. Actual sale happened on September 23, October 23. Now, as per sales tax law, whatever sales happened between principal to agent during July and August, no sales tax needs to be paid. Only for the actual sales which takes place from September to October, this would be reported in the principal returns which they file. So that means to say government doesn't get revenue till the actual sale happens under erstwhile law. But under GST law, on each removal, it is deemed to be a supply, where provisions of Section 12 in relation to goods, Section 13 in relation to service gets triggered for time of supply, wherein GST is to be paid by principal for the goods supplied to the agent. So again, why is that this particular topic got its attention so much? I'll give one example this way. Let's take example of say principal and agent. Principal, say ABC Limited, who is into manufacturing activity of say cement. Agent, I would call Mr. X, who gets commission say 5%. Now, assuming April 23, May 23, June 23, so on, till March 23. Say 1 lakh is the value of supply every month he makes on behalf of the seller. This is the volume of supply which is going to make. Total comes to say 12 lakhs. And every month, the commission of 5% used to be 5,000. So on and so forth. Till March, if you examine, 60,000 is going to be the commission which is earned by agent. Now, when you do audit of this particular agent, when you look at his profit and loss account, this is my profit and loss account. In profit and loss account, we will say by commission 60,000. To expenses, say notionally, some 50,000 is incurred. The balancing figures, we will say net profit 10,000. This is my net income, which is disclosed my income tax return. On the other hand, when you look at his bank statement, in the bank statement, there will be a gross receipts, assuming that he doesn't have any inflow other than money received by sale of this particular commodity. Gross receipts in his bank statement would be showing rupees 12 lakhs. Now, this is where the GST law has broken the conundrum and said this value of 12 lakhs is relevant as a supply from GST point of view. Now, this is the importance of definition of agent, where your section 7 read with schedule 1 has explained that goods supplied by the agent on behalf of principal is deemed to be a supply carried out by the agent. By virtue of this definition of agent is relevant for us when we read this particular registration chapter. Moving further, aggregate turnover. Now, this term aggregate turnover is very, very widely used right from your registration, till your input tax credit reversal under Rule 42-43. I believe Judges has covered this input tax credit chapter. We'll understand this definition of aggregate turnover, where it says aggregate turnover means value of all taxable supplies, including excluding the value of inward supply on which tax is payable by a person on reverse charge. Now, this particular definition, I'll just give you a clarity in this way. Let me just insert one slide. Assuming I'm a XYZ Limited. XYZ Limited, when you look at the profit and loss account, assuming this is my profit and loss account, debit side, credit side, sales, expenses. On sales, I pay tax on forward charge mechanism. This I call levy under section 9, subsection 1. On expenses, I pay tax on reverse charge. Mechanism. This particular reverse charge mechanism is a levy under 9 subsection 3 or 9 subsection 4. There is a list of notified goods, notified services, or there is a list of services on which a builder, a real estate person is supposed to pay tax on reverse charge mechanism. So when I look into P&L account, assuming that there is an amount on forward charge basis 12 lakhs, on which I pay GST at the rate of 18%. On the expense side, I have say 2 lakh as an expense on which I pay GST at the rate of 18%. Now, this is taxable. Both are taxable in the hands of XYZ Limited. So if you ask what is a taxable supply, value of taxable supply, I would say one is under forward charge, second is under reverse charge. Under forward charge, it is 12 lakhs. On reverse charge, it is 2 lakhs. Total value happens to be 14 lakhs. Now, when you talk about aggregate turnover, aggregate annual turnover, this talks only about taxable supplies. The first definition we were talking is taxable supply, excluding supply on which tax is payable under reverse charge. So here, for the purpose of this particular definition, only 12 lakhs is going to be my aggregate turnover. Only 12 lakhs is going to be my turnover for computation of turnover for computation of threshold limit. Now, so why is that we were talking about this turnover? When you look into GSTR 3B, when you look into your GSTR 3B, you have table 3, wherein in table 3, I report taxes payable under forward charge. I also report the turnover on which taxes payable under reverse charge. Because I report both these turnover, for the purpose of computation of annual turnover, only that turnover on which tax is payable on forward charge is relevant. The tax payable under reverse charge is irrelevant. This is what we need to understand from your computation of aggregate turnover point of view. So to start with, aggregate turnover, students, I recommend, like while listening to me, please refer your institute material. There is a definition of aggregate turnover. Let me just see. I think this definition is not covered here. You can write down in your institute material. Sorry, you can write down in your working notes this particular definition for a better understanding. Reason, we use this particular aggregate turnover for computation of turnover. For computation of turnover for section 22. Section 22. For this particular section 22, there's a 4 marks problem. You need to know this particular term, aggregate turnover, from that particular point of view. First and foremost, all taxable supply excluding value of inward supply on which tax is payable under reverse charge. They're asking you to exclude your RCM. Next, exempt supplies. Exempt supplies. This is my second turnover which I take into consideration. Third, export of goods or services or both. And fourth, interstate supplies of persons having same PAN to be computed on all India basis. To be computed on all India basis. Excludes central tax, state tax, integrated tax. Somewhere in institute material, you will have this particular turnover. Let me just see the respective page. Yeah. Come to page number 8.9. Your institute material, page number 8.9. Aggregate turnover. This includes taxable supply, exempt supply, exports, interstate supply of persons having same PAN, but excludes CGST, SGST, IGST, compensations is value of inward supply on which tax is payable under reverse charge. These are exclusion. This one particular table is going to be relevant from your examination point of view, right? So this is one definition. Please mark in your working note for understanding purpose. Now, why is it important? I'll explain this term called exempt supply, and then I'll make you understand this particular aggregate turnover, how do we compute and why it is important. Section 2, clause 47 deals with your term called exempt supply. The term exempt supply is defined as supply of any goods or services or both which attracts nil rate of tax or which may be wholly exempt under tax under section 11 or section 6 of IGST Act and includes non-taxable supply. When I talk about non-taxable supply, when you refer to section 9, there is a reference to alcohol, there is a reference to petrol or diesel. These are the aspects which are non-taxable elements under section 9 of GST Act. I repeat, when I refer to section 9 of GST Act, supply of goods and services which are other than alcohol for human consumption, petrol or diesel or petroleum products. These are the three elements which are kept outside the purview of my levy. That particular aspect is covered in my exempt supply. So please keep in mind, when we travel to our aggregate turnover, there is a reference to exempt supply. The term exempt supply has been explained in your section 2, clause 47 as element of supply on which the rate of tax is nil or exempted. This nil or exempted, we have studied a chapter called exemptions under GST law. In that particular chapter, we goods or services, we have a detailed list which we have examined. In addition to that, the value of supplies which are not taxable supply, which are not subjected to GST, also to be read. The term non-taxable supply is defined as supply of goods or services which is not leviable to tax. So how do I know that? Please refer to section 9. Please refer to section 9. This is what we need to understand. Now, before I go to the next definition, I'll give little more clarity on this aspect. I'll make you to understand, let's assume XYZ Limited, we examine their books of accounts. The information available from books of accounts are like this. Say 1, advances for taxable services, say rupees 10 lakh. Interest income on fixed deposit, rupees 2 lakhs. Rental income, residential, rupees 3 lakh. Supply of goods at the rate of 12%, say rupees 5 lakh. Rupees 5 lakh. Sale of agricultural produce, I'll say tax at the rate of 5%, say rupees 10 lakh. Next item, services from GTA, I would say tax at the rate of 5%. Tax at the rate of 5%. Rupees 1 lakh. Now, this is a detailed information which is available from the books of accounts of this particular assessor. Okay. Now, each of these 6 items, we will try to examine section 2, clause 6, read with clause 47. Right? Now, these are the information available. So what I will do? Advance for taxable services. Please understand, any money received in relation to services, section 13 deals with your time of supply. They say, as and when the services are rendered or money received in advance, pay GST. Now, I'll put a remarks column. I will put aggregate turnover conclusion. Now, remarks column for serial number 1, services which are taxable or which are received in advance. I would say this is taxable. Interest income on fixed deposit. We have studied under exemption chapter any income received by way of interest or discount on the activity of extending loans and deposits, with where the consideration is represented as income or discount, is exempt under GST law. I'll say this is exempt. Rental income, which is in relation to residential activity. Money received by way of renting of residential property, which is used for residential purpose, is exempt under GST law. Supply of goods at the rate of 12%. Since the rate of tax they have given, I would say this is taxable. Sale of agriculture produce. Now, when I'm selling agriculture produce, we have written tax is applicable at the rate of 5%. When tax is applicable at the rate of 5%, this is an indication. This is an indication that I am selling an agriculture produce not as an agriculturist, rather maybe as a middleman, but in a pack condition where the goods are subjected to GST. Then again, I'll say this is taxable. Similarly, entry number 6, services from GTA tax rate 5%. In the previous slide, I have given a clarity. When services are rendered by a goods transport agency, the rate of tax is 5%, where the service provider is not willing to register under GST and collect GST. The rate of tax is 12%, where the service provider is willing to charge GST on that particular supply. So here I would say this is taxable. This is taxable. Now, taxable in the hands of service provider or service recipient? Answer is in the hands of service recipient, it is taxable. This is how we identify the activity of taxable, the activity of exempt under GST law. Moving further, for the purpose of aggregate turnover computation, the term aggregate turnover, we will include activity of taxable services for aggregate turnover. Now, sir, there is a timing difference. I would not recognize this money taxable service as income in my P&L account. I receive this money as advance. I park in my balance sheet as current liability. Please keep in mind, money received, which is subjected to GST, I am looking at time of supply provisions for payment of GST. So that would be considered as a supply for the purpose of payment of GST. That forms part of my aggregate turnover. Second, interest income exempt under GST. Look at section 2, clause 6, where taxable supply, exempt supplies. Exempt supply definition, it is wholly exempt or subject to nil rate. Because it is exempted, it also forms part of my aggregate turnover. Rental income from residential activity. So this is exempted. Though it is exempted, I would take that into my aggregate turnover, annual aggregate turnover computation. Supply of goods at the rate of 12%. Because it is taxable, I take that also into consideration. Sale of agriculture produce. Because it is taxable, I take that into my aggregate turnover computation. Services from GTA. When you read this clause, section 2, clause 6, it says all taxable supplies excluding goods and services on which tax is paid under reverse charge. By virtue of that, this does not form part of my aggregate turnover. So when you look at the total of ATO, we would say 10 plus 2 plus 3 plus 5 plus 10. All put together, 30 lakhs happens to be my aggregate turnover. This is how I calculate my aggregate turnover for examining my GST threshold limit computation. I'll give one more example. Just keep, let me introduce one more slide. Let's look from Mr. A. Mr. A, who happens to be a proprietor. Now, serial number, description, amount. We will plot taxable, exempt, non-GST. Then finally remarks. Serial number 1, business turnover from trading. I would say taxable at the rate of 12%. Assuming I am into Trading of stationery items. My total income is 10 lakhs. Second item, interest on fixed deposit. I have fixed deposits from which I derive 2 lakhs as my income. Third, salary from XYZ Limited. Salary from XYZ Limited. Say another 20 lakh. Fourth example, sale of land. Another, say 8 lakhs. Fifth item, sale of petrol and diesel. Sale of petrol and diesel. Say 20 lakh. I'll give you 5 minutes. I'll give you not 5 minutes too much. I'll give you 2 minutes. Please examine the activity. Please examine the activity. Please put your remarks and give me what is your annual turnover, aggregate turnover for purpose of section 2, clause 6. I'll give you 2 minutes, students. Please work out and give me what is the aggregate turnover for this particular example. I'm trying to make you through the previous discussions. Like Arun sir has discussed levy related aspect. I've explained you on exemption. Again, we discussed on input tax credit. So I'm just trying to refresh your knowledge on all these discussions. Good evening, Viraj. Good evening, Gita. Balaji says 40 lakh. Okay. Suman says 52 lakhs. Okay. I'll wait for 2 more answers. Be quick, students. Gita says 32 lakhs. Okay. Look at the answers. 3 answers have come. 3 are all different. I'll wait for 1 more answer. Good. Manan says 40 lakhs. Okay. Now let us have a discussion point by point. Business from trading activity where 10 lakhs is my income. So because they have given 12 lakhs is 12% is the rate of tax, I'll call this as taxable. Interest on fixed deposits, exempt, I'll say E. Salary from XYZ Limited, 20 lakhs. Now, this salary which I have received for 20 lakhs item, Schedule 1, Schedule 2, Schedule 3. When you look at Schedule 3, it says 20 lakhs is a Schedule 3 transaction. Services rendered by an employee to employer is neither called a supply of goods nor supply of services. Neither supply of goods nor supply of services. I would say non-GST. Non-GST in brackets Schedule 3 item. Schedule number 3 item. Now, Schedule number 3 item, please keep in mind, students, it is not a supply. It is not a supply. When it is not a supply, it doesn't fit into my definition of it doesn't fit into my supply related computation. Sale of land. Again, when I sell a land, Schedule 3 says supply of land or building prior to issuance of a occupancy certificate or completion certificate is considered as an immobile property. Immobile property, non-GST supply, non-GST item. It is neither supply of goods nor supply of services. So it is again a Schedule 3 item. Sale of petrol and diesel. I would call this as exempt supply. Exempt supply includes not tax, not leviable to tax. By section 9, when I read, petrol, diesel, alcohol are not under the levy for the purpose of GST. I would call that as an exempt supply. Now, remarks, taxable supply forms part of my aggregate turnover. Exempt supply forms part of aggregate turnover. Non-GST item doesn't form part of my aggregate turnover. Exempt supply again forms part of my turnover. So what I will do, I'll say 10 plus 2 plus 20. Only 3 items to be taken into consideration. 32 lakhs is going to be my aggregate turnover for the purpose of section 2, clause 6. Hope this discussion is clear, students. You have any doubts, please let me know. I'll clarify. Prerna says serial number 3 and 4 is a non-GST supply. Completely agree with you, Prerna. Prerna, petrol and diesel, it is not leviable to tax. We cannot call this as a non-GST supply. Sale of petrol and diesel is not covered under schedule number 3. Rather, it will form part of my exempt supply. Hope this is clear, Prerna. Manan says clear. Good. Students, please keep in mind, examination, we have 4 marks where we will be tested from these transactions, where they'll give you something like this, where the reverse charge element is there or non-GST supply schedule 3 transaction is there. This is how we need to understand the term aggregate turnover, for the purpose of calculating the turnover. Taxable supply, yes, take into consideration. Exempt supply, yes, take into consideration. Exports, yes, take into consideration. Interstate supply. Now, this is nothing but all your stock transfer. In relation to goods, cross-charge in relation to services. I repeat, stock transfer for the purpose of goods, cross-charge for the purpose of your services. This is how I calculate my aggregate turnover. I'll give one more example in relation to cross-charge. Let me just insert one more slide. Now, I'll give an example of cross-charge this way. Say P&L of XYZ Limited. P&L of XYZ Limited. Now, when I look at this P&L, I have, say, debit side of P&L, credit side of P&L. I call particulars. I have Tamil Nadu. I have Karnataka. I have Tamil Nadu, Karnataka, total. Tamil Nadu, Karnataka, in total. Sales, outside parties, say 30 lakh. I will say rupees in lakh. For Karnataka, say 20 lakh. Total 50 lakh. Stock transfer. Tamil Nadu to Karnataka, say 2 lakh. Karnataka to Tamil Nadu, 5 lakh. 5 plus 2, 7. Here I'll say purchases, outside purchases, stock transfer. Outside purchases, let me say 28 lakh. Karnataka, say 19 lakh. Total 20 plus 28, 48, 47. Stock transfer in Tamil Nadu, 5 lakh. And in Karnataka, 2 lakh, 7 lakh. Then cross charge for services, nil from Tamil Nadu, and from Karnataka, 2 lakhs. Total 2 lakhs. Here I'll say expenses, direct expenses, outside cross charge. From Karnataka to Tamil Nadu, 2 lakhs, nil here, total 2 lakhs, say 5 lakhs here, another 1 lakh here, 6 lakhs. Now, when I look at my aggregate turnover, I will see 50 lakhs is eligible. Stock transfer is also eligible. Cross charge is also eligible. So by virtue of this, 57 plus 2, 59 lakhs is what relevant. When you look at your income tax return, ITR filed with the income tax department, only 50 lakhs is my turnover reported. ITR. 59 lakhs is the turnover reported for GST point of view. So here, what is my aggregate turnover? Your statutory audit, say financials. When I prepare financials also will have a turnover of 50 lakhs. Only for the purpose of GST, when I look individually, my aggregate turnover happens to be 59 lakhs. Section 2, clause 6. What is the aggregate turnover for the purpose of GST? It would be 59 lakhs, not 50 lakhs. This would be the third scenario which would be tested in your examination, forming part of your 4 marks problem. Any doubts, students? So far we have discussed. Are we clear, students, with this definition of aggregate turnover, where we also take into consideration of your interstate supplies having same pattern? Suman says yes. Good. I'll go forward. Agriculturist. The term agriculturist has drawn its attention, income tax point of view, indirect tax point of view. Please keep in mind, income tax, any income derived from agricultural activity is exempted under GST law. Any income from agriculture is considered for the purpose of aggregation but excluded from taxation. Similarly, under GST also, the same. Agriculturist means an individual or a HUF who undertakes cultivation of land. Now here, they are considered only an individual. They have considered only HUF. What happens to a private limited company? What happens to a trust? What happens to your society? Please keep in mind, agricultural land is permitted to be registered only in the hands of an individual or HUF. Other than an individual or HUF, you cannot possess agricultural land in any other person's name. So here, agriculturist means an individual or HUF who undertakes cultivation of land. How? By own labor, or by the family, or by the servants. I do myself, or I do from based on my family support, or on the basis of servants on wages payable in cash or kind, under personal supervision or personal supervision of any member of the family. Only then I would be called myself as agriculturist. This particular term, agriculturist, is very, very important from your GST law, GST point of view, for examining your aggregate turnover from registration point of view. This is what we need to remember. Next, casual taxable person. Casual taxable person we discussed in exemptions chapter. Again, I'll explain this way. A person who occasionally undertakes transactions involving supply of goods or services or both in the course of furtherance of business, whether as principal or agent or in any other capacity, in a state or union territory where he has no fixed place of business, A classic example for this is sari sale. One, sari sale. Second, I would say sweets for Diwali. Third is your firecrackers. Firecrackers. These are all seasonal sales. Assuming I'm a trader who sells saris. Now, you would have seen that in your town or village, there will be one particular like a conventional hall where a person comes from Rajasthan, from Jaipur, or from Tamil Nadu, or from Haryana. They come and put a stall saying that these are Kanchipattu saris, or these are so-and-so particular make. Like, you have a particular handmade items where people have a fantasy to buy those items. Now, do you do on a regular basis? No, sir, I don't do on a regular basis. I don't have a fixed place of business. I don't have a fixed place of business. What do you mean by fixed place of business? A place where you have a permanence for your existence. Like, when you think about this business, I take the particular convention hall rent for 2 months to 3 months. Max to max 3 months, I'll do my business. I'll move another town because people want something new. If I'm there continuously on 6 to 9 months or 1 year, people will never buy the sarees. If I open a particular exhibition, people are fond. Something new would have come. That's how the human tendency is. Similarly, is your sweets and firecrackers. Our Diwali is one classic example. I'm from South India. I'm from Karnataka. We have a place called Hosur, Krishnagiri, that is in Tamil Nadu. Karnataka and Tamil Nadu, there is a place called Hosur, where there is like a place called Sivakasi. Sivakasi is a place in Tamil Nadu. 75% of the crackers used in India are manufactured from this place called Sivakasi. Now, what happens when Diwali is there? I open a particular shop for a span of max to max 1 to 2 months. Now, this is a point in time, my sale happens. Once 2 months is over, I'll close my shop. 1 month prior to Diwali, 1 month after Diwali, I do my business. And in relation to sweets, max to max, 1 month is a point in time I open this particular shop. Look at NCR, Delhi NCR region. All these places in North India where Diwali is an auspicious festival, people buy sweets for exchanging as gifts in family members. So what we will do, like, I manufacture sweets in tons together only for this particular event. And it so happens that max to max 10 days is the point in time my business happens. After 10 days, I close my business, I leave from that particular place. So here, I come into place as CTP, casual taxable person, where I don't have any fixed place of business. I do it on an occasional basis. Now, sir, what do you mean by fixed establishment? It's a place. It's a place which is characterized by a sufficient degree of permanence. I go and stay there. I, like, probably, if you say from residence point of view, I sleep, I eat, I take rest. There is a degree of permanence. Office, I go morning 9, I'll come back by evening 5. There is an identity for this particular place. Residence or suitable structure in terms of human and technical resources to supply or receive services. So I stay there, I get a service. I supply services from there. In case of a fixed establishment, in case of a CTP, I don't have fixed establishment. Like example, sir, I have an office in Connaught Place in Delhi. Connaught Place is a very prominent business area. Assuming that I have, say, there is a place called Palki Bazaar. In Delhi, I have my main office in Connaught Place. I have a branch in, say, Palki Bazaar. Palki Bazaar is another commercial area. So I would say Palki Bazaar is a fixed establishment where I have a branch. For a moment, let's assume that I hire this Palki Bazaar for a temporary week's time. Then I call that as a fixed establishment which is not in existence other than Connaught Place. In general, fixed establishment where there's a sufficient degree of permanence. If I'm not going to stay there for a long point in time where I don't have a rental agreement, etc., for a continuous period, I wouldn't call that as a fixed establishment. This term fixed establishment relevant from CTP, casual taxable person point of view. Next is our definition, NRTP, non-resident taxable person. Like you have example of this online services. We had OTT. What is that? Netflix. Let's take example of Netflix. Another example is your Amazon. Amazon.com. Amazon.com. Not Amazon.in. Now, these are the platform where I get services for entertainment, for knowledge, or for trading commerce. Now, these are the people I call as non-resident taxable person. Person who occasionally undertakes transactions. Who occasionally, underline the term occasional. Transactions involving supply of goods or services where, whether as a principal or agent in any other capacity, but who has no fixed place of business in India. No fixed place of business in India. Netflix from US, Amazon from US, they supply services somewhere outside India. I call them as NRTP. Taxable person. Taxable person means a person who is registered or liable to be registered. The term taxable person, person who is registered or liable to be registered under 22 or 24. 5 to 10 minutes down the line from now, I'll explain what is Section 22, the relevance of Section 22. Turnover in state. Turnover in state, remember this definition of 2 clause 6 aggregate turnover. This computation I do state-wise. The same definition when I do state-wise, that's called turnover in state. This is my another definition. Now, before we start with Section 22, I'll take 5 minutes from now where I'll give you some examples for you to throw a line how we read a particular case in front of us. We will understand the provisions from GST. Mr. X, an individual residing in the state of Maharashtra, has approached with the below information seeking confirmation of whether to obtain for registration, GST registration. Income from salary, 120 lakhs. Income from rental income, 10 lakhs. Income from mutual fund, 25 lakhs. Now here, income from salary, Schedule 3 transaction, not a supply of goods, not supply of services. Rental income, exempt, forms part of Section 2, Clause 47. Mutual fund income, actionable claim, Schedule 3 transaction, not a supply, of goods or services. It is neither supply of goods nor services. Only 10 lakhs is relevant for the purpose of 2 clause 6. Mr. A business person residing in the state of Odisha, has approached with the below information for obtaining GST registration. Income from agricultural produce. We have read the definition of agricultural produce. There is an exemption given under Section 23. Agriculture produce for the purpose of levy. This is a Schedule 3 transaction. Not a Schedule 3 transaction. Agriculture produce, please keep in mind, this is a supply, but exempt under GST. Income from renting of space provided for storing agriculture produce in a cold storage. Now, this is an activity which is taxable under GST because storing of agriculture produce is exempted under GST. Section 2, Clause 47, exempted activity. Income from transportation of goods as a GTA. I'm a service provider where 15 lakhs is my income. Assuming 12% is the GST obtained, I would say it is a taxable activity. So for the purpose of Section 2 Clause C, exempt supply take into consideration, taxable activity or exempt take into consideration, and taxable activity take into consideration. All these three will be taken into consideration. Mr. P, a wholesale trader residing in the state of Tamil Nadu, has approached with the below information seeking whether to obtain GST registration. Income from trading activity taxable. Money received on behalf of principal. Agent taxable. Schedule 1 item. Income from bank fixed deposits exempt. Taxable, exempt. All three will be taken into consideration for Section 2, Clause 6. ABC Limited, a company, has obtained registration in the state of Jammu and Kashmir. They have undertaken below works in the state of Uttar Pradesh. Laying of a pipe for local municipality for a sum of rupees 150 lakhs. Now, is it rendered from Jammu and Kashmir or is it rendered in the state of Uttar Pradesh? Regular registration from Jammu and Kashmir or casual taxable person from Uttar Pradesh. Participated in a trade exhibition in the state of Bihar, bagged a contract for supply of goods worth 30 lakhs, taxable under GST. There's a trade exhibition in the state of Bihar. Now again comes into picture, did I supply it as a regular person from Jammu and Kashmir or did I took a CTP registration in Bihar? If it is so, should I need to register in the state of Jammu and Kashmir, in the state of Bihar, in the state of Uttar Pradesh? Examine whether billing can be done from Jammu and Kashmir or separate registration is required. In this example, we will see whether registration is required from Jammu and Kashmir alone or UP or Bihar. Now, all these three, we get an answer when we read Section 22. Now, students, from this slide, I'm getting into the core discussion of Section 22. Core discussion of Section 22. Please open your institute material. Institute material, come to this particular Section 22. This slide, page number 8.15, very, very relevant. Examination, 1 mark is the weightage from this particular table. What I will do, when I finish Section 22, I'll make you how to remember this 10 lakhs, 20 lakhs, 40 lakhs from understanding point of view. No need to mug up. I explain in detail where you'll memorize this automatically once you understand the concept. Sorry. Yes. Page number 8.6, statutory provisions under Section 22. To start with this Section 22, I'm explaining one particular definition called special category states under Article 279A. Article 279A of the Constitution has identified 11 states as special category states. 11 states as special category states. Now, most of you, probably if you have looked at this state formation, like example, Andhra Pradesh. From Andhra Pradesh, Telangana has been carved out. When Telangana has been carved out, there was a demand that we want special category status. Andhra Pradesh also say we want special category status. Now, when we say special category status, this special category status is a prominence where administrative point of view, taxation point of view, some benefits are given to these states as privileged states for a revenue point of view. Some share of revenue from the union gets transferred to this special status category states. If you look at these 11 states, excluding Jammu Kashmir, excluding Himachal Pradesh, Uttarakhand, and Arunachal Pradesh. Now, I'll just share you the Indian map. Let me just give a minute. I'll open India map. If you are familiar with this northeastern states, hope my screen is visible, students. We have this belt called Arunachal Pradesh, Nagaland, Manipur, Mizoram, Tripura, Meghalaya, Assam. We call these 7 states as 7 sisters. People are familiar with this northeastern states. We call them as 7 sisters from Hindu mythology point of view. When someone travels to these northeastern states, as a custom, we visit these 7 states as a auspicious from the mythology point of view. So what they have done, all the 7 states, including Himachal Pradesh, Uttar Pradesh, they have added Jammu and Kashmir forming part of my special category states. Arunachal Pradesh, Jammu and Kashmir, Himachal Pradesh, Uttarakhand. Barring these 4 states, the rest all are called as 7 sisters. Now, why I am talking about this 7 sisters and 4 other states? All these were given special category status. But from section 22 point of view, when we read registration, from registration, they say that only 4 states are relevant. Manipur, Mizoram, Nagaland, Tripura. MMNT. Please remember, Manipur, Mizoram, Nagaland, Tripura. Please write down in your working note as per section 22, read with explanation 3. My special category state includes only 4 states. Though my article 279A gives 11 states for the purpose of section 22, where we have a annual turnover threshold limit of rupees 10 lakhs. Rupees 10 lakhs. For the purpose of this, only 4 states are relevant. MMNT. Please memorize this term MMNT. The moment you go to your examination, just say aggregate turnover for section 22. There are the special category states: Manipur, Mizoram, Manipur, Mizoram, Nagaland, Tripura. Only these 4 are relevant. I'll just come back to our institute material. In institute material, let's come to this page. (8.15). Now look at your page number 8.15, students. Look at your Manipur, Mizoram, Nagaland, Tripura. For these 4 states, 10 lakhs, 10 lakhs, 10 lakhs. Either for supply of goods or supply of services. For these 4 states, 10 lakhs is your threshold limit. Now, I was telling you, I'll explain you the concept. No need to by heart, no need to memorize these things. Just remember the origin of section 22. In origin of section 22, article 279A, though 11 special category states are there, out of 11, only 4 are relevant for section 22. What are those 4? MMNT. Manipur, Mizoram, Nagaland, Tripura. For these 4 states, 10 lakhs is my threshold limit. I'll come back to my presentation. Now, section 22 clearly says that only these 4 states are considered as special category states. What happens to the other? Deemed to be our normal states. So if you are a special category, if you are a special category state, 10 lakhs. Other than special category, 20 lakhs is my threshold limit. This is what is the relevance. Now, section 22 says that other than special category states, every supplier shall be liable. Every supplier shall be liable. Please come to your institute material, students. Page number 8.6. Page number 8.6. I'm just coming back to my presentation. Every supplier shall be liable for registration in the state or union territory from where supply of taxable goods and services is made if aggregate turnover exceeds 20 lakh rupees. If aggregate turnover exceeds 20 lakh rupees. For special category states, every supplier shall be liable for registration in the state or union territory where supply of taxable goods and services made if the aggregate turnover exceeds 10 lakhs in a financial year. 20 lakhs is a threshold limit other than special category. 10 lakhs is a limit in case of special category states. For the purpose of special category states, what is the states we need to remember? M, N, T. Manipur, Mizoram, Nagaland, Tripura. These are the 4 states which are relevant for my registration point of view. Let me just take one fresh slide. Now, assuming I'll give example this way. Entity, activity, or annual turnover, state. I'll give remarks also. Remarks and state your conclusion. This is from section 22, what we have read. Say entity, serial number also. Serial number 1. Entity XYZ Limited. Aggregate turnover is 25 lakhs. Say exempt, taxable. Exempt is 20 lakh, taxable is 5 lakhs. Say state of Maharashtra. Now, what does it say? I'll come back to our previous slide. Every supplier shall be liable for registration in the state or in the union territory from where supply of taxable goods and services is made if aggregate turnover exceeds 20 lakhs in a financial year. Now, question here. Now, my aggregate turnover is exceeding 20 lakh. Maharashtra is not a special category state. Because it is not a special category state, for the purpose of section 22, I'll say it is exceeding 20 lakhs. In this case, since there is a taxable supply, registration, I would say, required. Registration is required. Example number 2. ABC Limited. Annual turnover, say 32 lakhs. Exempt supply, 32 lakhs. State, I'll say Kerala. Now, what I will do, first and foremost, I'll see, is this special category state? I would say no. If it is not a special category state, for the purpose of section 22, there should be annual turnover exceeding 20 lakhs. Is there any taxable turnover? Answer is no. Because there is no taxable turnover, my registration requirement, I'll say not required. Scenario number 3. Tripura. My annual turnover is 12 lakhs. I'll say out of 12 lakhs, schedule 3 supply is 6 lakhs. Exempt supply is 6 lakhs. Now, sorry, I have written here Tripura. Instead, I'll say PQ Limited. State is Tripura. State is Tripura. Now, here what I will do, first and foremost, is it a special category state? Answer is yes, it is a special category state. In case of a special category state, my section 22 says if the annual aggregate turnover is exceeding 10 lakhs. Now here, my annual aggregate turnover out of 12 lakhs, I'll exclude schedule 3 transaction. I'll consider only exempted turnover of 6 lakhs. Here I'll say since exempted turnover is only 6 lakhs and taxable turnover is 0, I'll say registration requirement. I'll say not required. This is how I evaluate the state. I evaluate my aggregate turnover for the purpose of exempt, taxable, schedule 3 transaction. On the basis of this, like activity 1, examine the state. Activity 2, examine the aggregate turnover. Activity 3, examine the nature of exempt turnover, taxable schedule 3. Activity number 4, examine whether 20 lakhs, examine whether 10 lakhs. This is what we do. On the basis of these 4 points, I'll come into a conclusion whether registration is required under section 22 or not. Examination, this is how your entire problem is going to be framed. I'm making you to understand with simple examples where a lengthy question is there. You will be in a position to understand how do you evaluate this particular problem. Let me see any doubts before we go further. Exhibition kind, both states to be aggregated. Prerna, sorry, I saw your question now. Aggregated from which point of view? If you can clarify, I'll elaborate in detail. I missed your question. It was a little late. Now, section 22 says these special category states, government may, at the request of a particular special category states, on the recommendation of a GST council. Now, examination, by and large, please keep in mind, always the recommendation for exemption, for taxability, for registration, for special procedure, various aspects are there where recommendations, on the recommendations. The recommendations are always given by GST council. On the request of a special category state or this GST council recommendation, enhancement from 10 lakhs to 20 lakhs is possible in case of your special category states. Now, just give me a minute. Yeah. Now, moving on from section 22, where we started, there came a new element of dimension saying that when you're talking about registration, I could have a supply. This supply has been bifurcated as supply of goods, supply of services. Supply of goods, like scenario 1, both. Scenario 2, goods alone. Scenario 3, services alone. So when they examine your business model, they say, first scenario, I'll examine both goods and services for 10 lakhs or 20 lakhs. I examine goods alone for a particular limit called 40 lakhs. I examine service alone for a limit called, again, 10 lakhs or 20 lakhs. The government has given a flexibility based on your business model, how you want to decide what you want to do. Now, this GST provisions are pretty complicated, where you as a future chartered accountant are going to understand the nitty-gritties of, say, section 10. Section 10, which deals with your composition scheme. Under composition scheme, I could be a service provider where I pay 3% 3% GST, 6% GST. I could be a trader, manufacturer where I'll pay 1% or 5% GST. The composition scheme has been carved out such a fashion that a small time business person, 50 lakhs, a manufacturer trader, 1.5 crore is a upper threshold limit where I'll pay lesser tax where I enjoy the benefit of composition scheme. Under composition scheme, I don't get any benefit of input tax credit. Assuming I don't want to be under composition, I want to be a regular provider, then this 10 lakhs, 20 lakhs comes into picture, where supply of goods and services, supply of goods alone, supply of services alone comes into picture for registration. So here, entry, like when a client comes to you for advice, first and foremost, you'll ask a question. Do you want to be under composition scheme? If your answer is yes, please travel to section 10. There are list of provisions for a service provider alone, for a service provider with a sale of goods. Examine section 10 separately for eligibility. Sir, I don't want to be under composition. I wanted the benefit of input tax credit. Then travel to section 22, wherein section 22 says, look at 10 lakhs special category states, look at 20 lakhs other than special category states. Sir, if you are supplier of goods alone, then 40 lakhs is a threshold limit. Now, government said that this regular limit of 20 lakhs will be enhanced to 40 lakhs, wherein supplier of goods alone, government at the request of a state or on the recommendation of a council, enhancing 20 lakhs to a turnover not exceeding 40 lakhs. In case of a supplier who's exclusively engaged in supply of goods. When we say exclusively, there is an explanation inserted in section 22 to clarify, saying that when a person shall be considered as exclusively into supply of goods, if he is having an exempt supply of service, that is where his interest income is represented by way of interest or discount by extending loans or deposits. So here they are saying that assuming there is a trader, when you look at his P&L account, from trading activity, you have 32 lakhs. From interest income, you have, say, 10 lakhs. Total happens to be 42 lakhs. They say, person shall be considered to be engaged exclusively in supply of goods, even if he is engaged in exempt supply of goods and services provided by way of extending deposit or loans or advances, insofar as consideration is represented by way of interest or discount. So what they are saying that when you look at this total turnover, they say, please ignore this particular interest income. Let me change slightly. This example is confusing. I'll say interest income of 6 lakhs, total of 38 lakhs. When you look at this composition, they say that first, check this turnover. My aggregate turnover, section 2, clause 6, my aggregate turnover is 38 lakhs. This is less than 40 lakhs. So here, though your total turnover is 38 lakhs, which includes interest income, they say, I ignore, even though my income is represented by way of interest or discount, please exclude this for the purpose of registration provision. So the provisions say that, look at the business of the person. If he is only into exclusive supply of goods, the state may, on the recommendation of the council, enhance 20 lakhs to 40 lakhs. So here, excluding Telangana and Jammu and Kashmir, Telangana and Jammu and Kashmir. This particular enhancement of 40 lakhs was undertaken by many of the states. I'll just come back to my institute material, page number 8.15. Now, summary 40 lakhs. Look at this table, page number 8.15. Look at this particular exclusive supply of goods, this column. So here you can see Puducherry, Telangana, Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand. Like if you recollect that 11 special category states, MMNT, Jammu and Kashmir, 5, 6, 7, 8, 9, 10, 11. So all special category states. So if you look at MMNT, all these special category states. Now, if you see here, Manipur, Mizoram, Nagaland, Tripura. The special category states, look, we are happy with 10 lakhs. We don't want to go for 40 lakhs in case of goods. Jammu and Kashmir. Now, in addition to that, Arunachal Pradesh has restricted to 20 lakhs. Meghalaya, Sikkim has restricted to. Now, this 20 lakhs is nothing but as per section 22. Section 22 limit, section 22 limit, section 22. In addition to this, Puducherry, Telangana. Puducherry, Telangana. These are the two states, Pondicherry and Telangana, who have restricted instead of 40 lakhs. They say we wanted to go only for 20 lakhs. So when you look at this provision for 40 lakhs, please keep in mind, first and foremost, MMNT. MMNT say no, only 10 lakhs is required. This is my first provision with respect to 40 lakhs. In addition to that, 20 lakhs, when you section 22 talks about 20 lakhs other than special category states. In this category, Puducherry, that is Pondicherry, and Telangana, they say no, we don't want 40 lakhs. We want only 20 lakhs as a special a threshold limit for the purpose of registration. MMNT 10 lakhs. Pondicherry, Telangana, they say we want only 20 lakhs for the purpose of your goods. In addition to that, you have Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand. These four states, instead of 40 lakhs, they have opted for 20 lakhs. They have opted for 20 lakhs. AMSU. Puducherry, Telangana, AMSU. These six states have opted for 20 lakhs as a threshold limit. This is how we need to understand section 22 for special category states other than special category states. In addition to that, for goods 40 lakhs, where Telangana and Pondicherry have understood this way. Hope this is clear, students. I'll come back to my slide. Now, this is a basic provision where they are talking about section 22, 10 lakhs, 20 lakhs, 40 lakhs. With respect to 40 lakhs, please keep in mind your four special category states, that is AMSU, Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand. They say 40 lakhs is not required, only 20 lakhs is okay. In addition to these four special category states, Puducherry, Pondicherry, and Telangana, they say we don't want 40 lakhs, we are happy with 20 lakhs. So when we talk about basic section 22, 10 lakhs and 20 lakhs. What are the states covered for 10 lakhs? MMNT. Please write down MMNT. Manipur, Mizoram, Nagaland, Tripura. Manipur, Mizoram, Nagaland, Tripura. MMNT. Mani, Mizo, Naga, Tripura. MMNT. Manipur, Mizoram, Nagaland, Tripura. Other than these four special category states, rest all 20 lakhs is your goods and services. Only exclusive for goods, section 22, only exclusive for goods. This 20 lakhs limit was enhanced to 40 lakhs. So when we talk about enhancement of 20 lakhs to 40 lakhs, first exclude that MMNT. Manipur, Mizoram, Nagaland, Tripura. In addition to these four states, what are the other two states? Pondicherry and Telangana, non-special category states. Special category states, AMSU, Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand. These four states, I don't want 40 lakhs, I want only 20 lakhs. Now, this is how we need to understand this 10 lakhs, 20 lakhs, and 40 lakhs. Students, we are at 7:35. Let's have a break for 10 minutes. 7:45, we will resume back with our discussion. let us continue with our discussion. There's one question. Prerna says, other than Manipur, Mizoram, Nagaland, Tripura, other special category states are also liable for 20 lakhs only in case of exclusive supply of goods. Okay, I got your point, Prerna. Let us look at the material. Students, please come to page number 8.14. 8.14. Now, this is a special exemption notification where the states, on the recommendations of the council or on the requirement of a particular state or union territory, on the recommendations of the council, there could be a enhancement of 20 lakhs to 40 lakhs. This is what we need to understand. So this particular notification, 10 of 2019, is the origin for this particular enhancement of 20 lakhs to 40 lakhs. So here they say, whose aggregate turnover in a financial year does not exceed 50 lakhs from the requirement to obtain registration. This is an exemption notification issued under section 23. So I'll come a little further. It says that exemption is applicable. Exception to this exemption is section 24. A person who is liable to register under section 24. There are 11 clauses where there is a compulsory or mandatory registration. 30 minutes down the line from now, I'll explain what is the importance of section 24. So if you are liable to register under section 24, this 40 lakhs is not applicable to me. Persons engaged in specific supply of ice cream, pan masala or tobacco products or fly ash brick, etc. I cannot register, I cannot get the exemption of that 40 lakhs. In addition to that, persons engaged in making intra-state supply within the state, that is Arunachal Pradesh, Uttarakhand, Meghalaya, Sikkim, Telangana, Puducherry, special category states as per 22. Here, Himachal Pradesh and Assam are missing. Assam and Himachal Pradesh. These two are missing in this particular exemption. So, Prerna, if you read that particular article 279A, we have 11 special category states. Out of those 11 states, Assam and Himachal Pradesh, they alone have not opted for this particular, Jammu and Kashmir also. Assam, Jammu and Kashmir, Himachal Pradesh. These four have not opted for this particular benefit now. So by virtue of this, if you see this particular table, Telangana and Puducherry, though not special category states, they say for the purpose of exclusive supply, I want only 20 lakhs threshold limit. Now, if you look at the special category states, Jammu and Kashmir, Assam, Himachal Pradesh. Jammu and Kashmir, Assam, Himachal Pradesh. These three states have opted for 40 lakhs limit. Rest all are the regular 20 lakhs limit. So you can read either way. Three states who have opted out for 20 lakhs and wanted a bigger limit: Jammu and Kashmir, Assam T, Himachal Pradesh, HP pencil. So this is how you can remember from examination point of view. These three states have opted for higher amount. So they say we don't want the lower limit of 20 lakhs. We want higher limit of 40 lakhs. For a supplier who is exclusively into supply of goods, intrastate supply. Intrastate supply of goods. This is what this particular notification has given my exemption. Prerna, is this clear, ma'am? Prerna, is this clear, ma? Now moving on further. Who is liable for registration? General provisions. These provisions are not required as on today. They say that person who was migrated from previous law, central excise, service tax, VAT, registration compulsory. Succession or transfer of business. Succession or transfer of business. Now it so happens that father started his business. Father is registered under GST. Over a point in time, father will be succeeded by his son or his daughter. So a person who is registered already, if he transfers his business to a successor, then the successor is bound to register. Like, let's take example, Mannan. Mannan's dad started a textile business. When Mannan's father retires from the business and Mannan come into that particular business, assuming it's a proprietary concern. Say, Mannan's father will have a different PAN and Mannan will have a different PAN. A point in time where there is a transfer of business from father to son, the son is to be registered because the business is transferred as a going concern. The business is transferred as a going concern. So this could be one case where there is a succession or transfer. Transfer by virtue of sale or merger. So as a going concern, if there is a transfer, that particular new entity which comes into picture have to get registered under GST. This is my point in time where irrespective of threshold turnover limit, registration under section 22. So here, assuming, I'll give an example this way. Say, let me come to a fresh slide. Just give me a minute. I'm not able to just get, let me. Now I'll put it this way. Say, Mr. X, a proprietor, and Mr. Y, son of Mr. X, April 23 to December 23, March 24. Assuming April 22 to December 23, the turnover is 32 lakhs, and December 23 to Jan 23 to March 24, the turnover is going to be 6 lakhs. Now, X continued business April to December, and Y carried on the business from December, or rather, say January. From Jan 24 to March 24, Y carried on this particular business. Now, if you look at this turnover, it is less than 10 lakhs, it is less than 20 lakhs. But by virtue of section 22, because of transfer as a going concern, Mr. Y needs to register under GST law. This is what section 23 talks about. I'll come to our institute material. Look at section 22, clause 3. Where a business is carried on by a taxable person registered under this act is transferred, whether on account of succession or otherwise, on to another person as a going concern, transfer of the successor as the case may be, shall be liable to register with effect from date of such transfer. So in this example, what we were talking, in this example, though I though Mr. Y's turnover, though Mr. Y turnover, aggregate turnover is less than section 22 threshold limit, by virtue of section 22 subsection 3 mandatory registration of Y. Now, this is what we were saying with respect to this example. Slightly, I'll alter this example this way. Instead of 32 lakhs, instead of 6 lakhs, I'll say this way, 18 lakhs and 6 lakhs. 18 plus 6 total is going to be 24 lakhs. Now, a point in time where assuming this is other than special category states, the moment aggregate turnover exceeds 20 lakhs, threshold limit is crossed, I need to register. Now here, if X is not registered because he's enjoying 18 lakhs less than 20 lakhs limit, though cumulatively it is going to be 24 lakhs, since X is not registered, if X is not registered, then Y is not required up to threshold limit. To threshold limit. In this example, if you read that section 22 clause 3 carefully, it says that where a business carried on by a taxable person, business is carried on by a taxable person. Who is a taxable person? Taxable person is a person who is already registered or liable to register. Liable to register. In this case, X, who happens to be a taxable person, who happens to be a trader, his total turnover is 18 lakhs. Assuming for a moment is not required to be registered. Because he's not a taxable person, provisions of section 22, subsection 3 fail. Registered under this act. Now, a person, if his X is not registered, whether on account of succession or otherwise to another person as a going concern, transferee or the successor as the case may be, shall be liable. Now, we will say it is not applicable because it is a failure. Because the transfer happened by an unregistered person, the recipient need not register till he crosses a threshold limit. This is how we understand and interpret. Examination students, based on that table in 8.15, read with this particular 2 marks as one particular problem. In addition to this, this provisions of, like, no, I'll put it this way. Section 22, subsection 1, where 10 lakhs and 20 lakhs is there, 2 marks will be tested. Section 22, subsection 3, another 2 marks will be tested. Total a package of 4 marks from your examination point of view. Moving further. Amalgamation or demerger. Now, whenever there is a new entity which comes into picture by way of amalgamation or demerger, generally there will be a court order the day where the new entity will be named, saying that on this day I declare the entity A and B merged together and the entity called XYZ Limited comes into picture. The day on which this announcement happens, from that day, the new entity will be liable to be registered. Aggregate turnover, I have explained in detail how to calculate. Now, explanation, one by one, I'll draw your attention. Section 22, this explanation, they say, Aggregate turnover include all supplies made by the taxable person, whether on his own account, or made on behalf of principal. Like you remember one example I gave, when you look at your P&L account of a trader, only 60,000 is shown as commission income. Whereas the bank statement shows 12 lakhs is the money which is collected, where 5% happens to be the commission. Now, for the purpose of this aggregate turnover, 12 lakhs will be considered as a aggregate turnover per agent. Though his income tax return or profit and loss account financials shows 60,000 as his income. Here, the term expression aggregate turnover shall compulsory, made by the taxable person, that is his commission, whether on his own account or made on behalf of his principal. So here, 12 lakhs plus 60,000, total 12.6 lakhs happens to be the turnover for the agent. Supply of goods after completion of job work by a registered job worker shall be treated as a supply of goods by the principal, referred in section 143. Value of such goods shall not be included in the aggregate turnover of job worker. I'll explain this by way of example. We just add one slide. Job work. Registration point of view, few aspects we need to understand. Section 22, read with section 143. Principal, agent. This example is very, very, very widely used in the business. I'll give a live example. Let me not name the brand. Let us assume that there is a there's an entity called ABC Limited who manufactures engine. There's an agent called no, I'll not call agent. I'll call this a job worker. There's a job worker called XYZ and Co. He's a I can say job worker. ABC Limited is in the state of Maharashtra. XYZ and Co. is in the state of, say, Karnataka. I'm giving this example where job worker manufacture DG set. Where, now when I say DG set is a instrument, it is a kind of machine. When the power goes off, automatically the power will be restored using a power backup machine called DG set, diesel generating set. It's run on diesel, that's why they call DG set, power backup sort of thing. Now here, when you look at DG set, how is this DG set manufactured? It will have a main engine. When the power goes off, the engine gets on automatically using a instrument called alternator. Alternator is a panel where the moment power, it is like this switch. Switch has got in, switch has got out, and there is a power button. When the main power supply is there, this will be off. When the main power is gone, automatically this will become on, and power will be generated from this DG set to the main unit. And this engine and alternator, there is something called acoustic enclosure. Acoustic enclosure is like a box which protects or takes away the noise from this particular DG set. Now here, if you look at like engine will be there. To engine, I just connect the alternator. Once I connect, I'll put it this way. So this is my main engine. This is my main engine. This is my main engine. To this, I need to add a small item called alternator. This is my alternator. On this main, like using a wire and cable, I connect this particular alternator. I put a small box kind of thing. This is called acoustic enclosure. This is my alternator. And this is my main engine. Now, in Maharashtra, ABC Limited manufactures engine. This particular engine is sent to Karnataka to this entity called XYZ Co. What does this entity will do? Whatever engine is there, manually he'll add alternator using wires and cables. On this, he puts a box called acoustic enclosure. Once I put all this entire set I call as a DG set. Now, this particular entity from Maharashtra, now he wants to sell this DG set to the states of Karnataka, Kerala, Tamil Nadu, Andhra Pradesh, Telangana. Now, these are all my South Indian states. So what happens? Once the DG set is manufactured in the state of Karnataka, from Karnataka, the goods may be dispatched to the customers in Karnataka, to Kerala, to Tamil Nadu, to Andhra Pradesh, to Telangana. This supply from job worker premise, goods are supplied. Goods are supplied by ABC Limited. Now, this job worker XYZ and Co. bills for job work charges. So here what is happening? Assuming the cost of engine is 80,000. Cost of engine is 80,000. Cost of alternator is say 10,000. Cost of acoustic enclosure is 20,000. All put together 80 plus 20, 100 plus 10, 110. 110 lakhs is put up with a profit margin is sold for 125,000. This is my selling price. So what happens here? ABC Limited, from the premises of job worker in Karnataka, he will undertake to sell the goods to his customers in the state of Karnataka, Kerala, Tamil Nadu, Andhra, etc. Now, this particular activity is generally undertaken in a business for manufacturer by from the premises of a principal. Section 143 allows this particular activity when it says that scenario 1, I'll say scenario, principal, job work, and registration. Scenario 1, principal is registered under GST. Job worker is unregistered dealer in GST. Then registration provisions, section 22, read with section 143. The provisions say that principal has to add job work premises as additional place of business for the purpose of removal from job worker premises. The previous example what we have discussed, for this ABC Limited to sell the goods to their customers in 4 states, in case if the job work is unregistered, principal has to add job worker premises additional place of business. Point number 2. Principal is registered, job worker is registered. Then principal can dispatch goods directly to customer. Now, why is this business model is adopted? Transportation, main cost, transportation, inventory, logistics. To reduce all these aspects, business do design this particular business model where 100% activity will not be done in-house, 80% or 75% is done in-house, balance 25 to 30% is done in the job worker premises. Scenario number 3. Principal is unregistered, job work is registered. In this case, principal cannot supply from job worker premise. This is what we need to understand. Examination, probably a 4 marks question from job work point of view. They would be asking you the provisions of 143 read with section 22 where registration has to be examined. This is how the concept is covered in your section 22. Explanation. So this importance of this particular explanation is when goods are sold by the principal from the premises of a job worker. Now here it's not principal to principal, rather, sorry, it is principal to principal base, not principal to agent. In explanation number 2, between ABC Limited and XYZ Co, it is a transaction between principal to principal, not principal to agent. Why? Job worker has his own skill set. Job worker is not mandated to sell, rather he is doing his own job work activity individually. So there is no principal agent concept. Because of that, any sale from job worker premises is to the account of principal. Next, section 23. There was a lot of amendments which happened in section 23. There's one slide where October 23, e-commerce operator exemption provision was examined in detail. Very, very important amendment happened in section 23 with respect to subsection 2. I'll just add one slide before I come to this. Now, I'll give you an overview. Though you have studied in intermediate, you would have studied in your regular articleship, etc. I'll explain once again in brief section 22, section 23, section 24. Section 22 is a standalone section where it simply asks, look at your annual turnover. Compare this with your threshold limit. Then decide whether to register or not. In addition to this, you had this migration to GST law. You had this succession or transfer. Based on this, you would be requiring to register under GST law. Section 23 deals with your exemption. Section 24 deals with compulsory registration. Section 24 deals with your compulsory registration. I'll just come to institute material once. Or I think institute material, some updations are required. There is, students, for your attention, October 31st October 2023 is a cutoff date for all amendments which would be tested in your attempt for May 2024. I repeat once again, who are going to write your exam in May 2024, all amendments made till 31st October 23 would be there in your examination. The institute material, what we are seeing as of today, is amended as on September 23. So there are few amendments made during September 23 and October 23, which are missing in your institute material. Board of Studies is going to come with a compendium of amendments which are relevant till October 23 for May 2024 attempt. One of a particular amendment of that sort I'll explain today, but my suggestion, please visit to Board of Studies website, ICAI.org. My humble suggestion, Most of you would have studied only a private material or at best institute material. If you visit our institute material www.icai.org, you have revision and test papers, you have suggested answers, you have MCQs, you have previous year question papers with answers. You have a repository of information. One of them is your recent amendments applicable for your next attempt, income tax or indirect taxation, customs. So generally, institute, the Board of Studies comes with a compendium. So wait for maybe another 15 days or so, where this amendments which are applicable for October 23 in the next attempt would be coming as a compendium. By end of my classes, as and when this material is ready for publication, I'll just bring to your knowledge. Now, important aspect, this May 24, there is an amendment in section 23, wherein section 24 is a compulsory registration where it says notwithstanding anything contained in section 22. That means section 24 can override section 22. That means to say, for a moment, if I have a annual turnover limit of 8 lakhs. Now, special category states or other than special category states, 10 lakhs and 20 lakhs is my requirement to register. Section 24 comes and says, assuming for a moment, if there is an interstate supply, you are mandatorily required to get registered under GST law. Even one transaction, if I make an interstate supply, compulsory registration gets triggered, where it says, I override section 22. That means to say, please don't ask me, sir, because there is a threshold limit of 10 lakhs or 20 lakhs, please give me an exemption. This overriding provision is there in section 24 for section 22 alone. Now, when I read section 23, there is a recent amendment where it says, notwithstanding anything contained in section 22 or section 24, government has authority to override or to notify. Now, this is a amendment made in section 23. This is a retrospective effect from 1st July 2023. Sorry, 1st July 2017. With effect from introduction of GST law, this section 23 has been amended. So this is one very, very important amendment applicable for your May 2024 attempt. Now, why we are discussing this particular provision? For a moment, there is an aspect called reverse charge mechanism. There is an aspect called reverse charge mechanism, or there is an aspect called interstate supply. Let's take example of interstate supply. I'll give this own example. Say the moment there is an interstate supply, there is a mandatory registration. Now, section 23 gives an exemption for handicraft goods. Let's take example of Humpy Toys. There is a place called Hampi in the state of Karnataka, where the elephants which are handmade are very, very popular. All these toys, every state has got a specific handmade goods which are called handicraft goods. These handicraft goods, though it is supplied within the state or outside the state, it is exempted by virtue of section 23 by virtue of notification say 10 of 2017. Now, section 24 all along says notwithstanding section 22. Now, because you are an interstate supply, you need to register is what it says. Now, by amendment which was made in October 23 retrospectively, all provisions of 24, all provisions of 22 are overridden by section 23. I have various examples taken care, various notifications in section 23, giving importance to this new amendment where this was introduced. Now, this is a change point which was came in as a new point for your May 2024 attempt. Let me start with your section 23. Section 23, persons not liable for registration. Following persons are not liable for registration. Who is that? Person engaged exclusively in the business of supplying goods or services or both that are not liable to tax or wholly exempt from tax. Engaged exclusively, which are not liable or which are wholly exempt. Not liable to tax. Example, sale of petrol and diesel. Not liable to tax. Sale of oligo liquor for human consumption. Not liable to tax. Exempt under GST. Supply of services to government, central government, exempt under GST. Works contract done for construction of a school building, which is in relation to activity covered under Article 243W in relation to activity of a panchayat, or Article 243G in relation to municipality or panchayat. In that case, I would call that as exempt activity. So if I'm a contractor, civil contractor, all activities I do in relation to municipality or panchayat don't register. Section 23 says don't register. Why? You're exclusively in that particular activity. Point number 2. You're an agriculturist. You're an agriculturist to the extent of supply of produce. Only to the extent of supply of produce out of cultivated land. So if there is an agricultural activity done by you and you supply this particular agriculture produce in your individual capacity, then no need to register under GST. This is what it says. I'll give an example of agriculture produce. There's one circular in relation to agriculture produce, agriculturist. Say, I'll call as a agent, commission, agent, and buyer. There is an agriculturist called Mr. X who produces paddy. There is a commission agent called XYZ and Co. There is a buyer called ABC Limited, who is a miller. Mr. X manufactures paddy, produces paddy, say worth 50 lakh. He doesn't know how to sell or where to sell, at what price to sell. So here, this commission agent, Mr. XYZ Co, what he happens, he acts as an agent on behalf of X and sells this to ABC Limited. Now 50 lakhs is the total value. Commission of X is say 10%, that is rupees 5 lakh. So when ABC Limited pays 50 lakhs to Mr. X. In turn, Mr. X pays 5 lakh to XYZ and Co. This circular says that agriculturist Mr. X is exempted. Why is he exempt? Because he's an agriculturist. Agriculturist by default under the constitution is exempt for taxation under income tax and indirect tax. Because this is an agriculture produce, XYZ Co is enjoying the benefit of exemption even for 5 lakhs commission. So here, this ABC Limited need not pay GST either to XYZ or to X. This is example number 1. Where, because I'm a commission agent, I don't pay any commission. Where it is in relation to agriculture produce sold as a commission agent. Example number 2. The same example. Agriculturist, commission agent, and buyer. Agriculturist individual Mr. X. Commission agent, say ABC and Co. Buyer, say PQR Limited. X sells agricultural produce worth 50 lakhs to ABC. ABC and Co. sells agricultural produce same 50 lakhs worth material at the rate of 55 lakh to PQR Limited. Now, in this case, ABC and Co. is not acting as a commission agent. Then, based on this activity, it will be called as a taxable activity unless otherwise the goods are exempted under GST. The sale of X to ABC and Co. will be exempt by virtue of section 23. This is one circular given to explain the position of a commission agent as an agent, the position of a commission agent as a individual supplier. So here we examine section 11 of CGST Act. We examine section 6 of IGST Act to see whether there is any exemption for that particular supply made by ABC and Co. Only if there is an exemption, then this particular agent would be exempted under GST law. This is what we need to understand. Students, any doubts so far? No doubts? Let's go further. Now, subclause 2. Now, this is what I was telling, where this has been amended retrospectively. Where all along section 24, department is enjoying luxury of litigation, luxury of demand for mandatory registration, though there is exemption notification under 23. So this notification, this amendment says, look at this red line. This notwithstanding till 24. This is the amendment. What happened? Notwithstanding anything contained contrary to subsection 1 of 22 or section 24, government may, on the recommendations of council, by notification, specify category of persons who may be exempted from registration. So this gave a lot of relaxation to many disputes which are there under GST law. One of the classic example for this is your reverse charge mechanism. Assuming that I am a person who, I'll give an example for this case. I'll just erase this. I'm an agriculturist. Now, when you look at my profit and loss account, say debit side, credit side, sale of agriculture produce, say 150 lakhs. On the debit side, say my transportation. My transportation is there for 30 lakhs. Now here, this transportation is under reverse charge mechanism. And this activity is covered under section 24, where they say, any person who is liable to pay tax under reverse charge, compulsory registration. Compulsory registration. Now here, if you look at section 23, what is my main supply? 150 lakhs. If I'm exclusively into a supply of this agricultural produce, no need to register. No registration is required. By virtue of this amendment in section 23, though I'm liable, though there is a RCM, conclusion is no registration under section 24, overriding section 23. This is what is a relaxation given by virtue of this amendment. I'll read once again. Notwithstanding anything contrary to 22, 1 and 23, government may, on the recommendations of council, notify specific category of persons who may be exempted. So here, agriculture is to the extent of supply of produce out of cultural cultivation of land. Since I'm only into this particular activity, or if you read clause A, I'm exclusively engaged in supply of exempt activity. So in either of these two cases, I'm not liable for a registration under GST. This is what importance of this section 23. Now, what I have done, I have picked some examples or some notifications which are notified under section 23. First notification. Taxable supplies on which tax is payable on reverse charge mechanism. Persons who are only engaged in making supply of taxable goods or services, total tax on which is liable to be paid on RCM. Such person is exempted from obtaining registration. Like example, GTA. If I'm a goods transport agent, where all along, like I have a choice 1, choice 2. Choice 1, 5% reverse charge. Choice 2, 12% forward charge. So if I'm a transporter, if I say to my customer, look, I'm not registered under GST. Please pay tax under 5% reverse charge. So here, as a GTA, I'm saying, look, I don't want to register under GST. You as a recipient, you pay GST. This is where this notification 5 of 2017 says, because you have opted not to pay GST under forward charge, because this is covered under reverse charge, by virtue of notification 9, subsection 3, this section 23 says that GTA exclusively into the activity of transportation need not register from registration. Need not register from registration. Next. Job worker engaged in making interstate supplies. A job worker who is engaged in making interstate supply of services to a registered person is exempted from registration. Now, one example I gave section 143. If my principal is a registered person, if principal is a registered person, by virtue of section 24, interstate supply, it is compulsory to register if I make an interstate supply, because it is notified under section 23. And if my principal is a registered person, I can enjoy not to register a job worker. Though I'm not registered, I can continue to do my business voluntarily. Now, this is a very big relief after this amendment. I repeat once again, under section 24, if there is an interstate supply, it is compulsory to register. It is compulsory to register. For a moment, I'll give an example this way. Say principal and job worker. Assuming scenario 1, principal is ABC Limited, or I'll just make little lively. Say Geeta happens to be a principal, Prerna happens to be a job worker. Geeta is in Maharashtra, Prerna is in, say, Tamil Nadu. Geeta is unregistered and Prerna is unregistered. Now, in case if Prerna wants to render job work services to Geeta, now here this happens to be a interstate supply. This happens to be a interstate supply. By virtue of section 24, now Prerna is mandated to register because Geeta is not registered. This notification 7 of 2017 came and gave a relaxation saying that if scenario 2, if Prerna is registered dealer, Geeta is a registered dealer, Prerna is an unregistered dealer, she can make a job work services by virtue of this exemption notification, though it is a interstate supply. All along, 24 was a Raja, section 24 was a king, which was enjoying unlimited power to say, look, by virtue of interstate supply, register under GST. Now, though section 23 says job work exemption, this overriding provision was not there in 23 to override section 22 and 24, which was a clarification much required, which came retrospectively. So going forward, if principal is registered, my job worker can supply services to a principal though the job worker is not registered under GST law. Now, exclusion, person liable for registration under 22 or voluntary registration or supply of services by a jewelry, goldsmith, silversmith, and other articles. These are exemptions where a job work, it is compulsory to register. Like example, say Joy Olikas, Kalyan Jewelers. Now, Joy Olikas from Kerala gave a job work to a goldsmith, Mr. X, who is from Jaipur, Rajasthan. Rajasthan is well known for some specific art. So, if this goldsmith from Rajasthan does any activity, he cannot enjoy this exemption, though he is unregistered person giving his services to Joy Olikas. Reason? This notification is excluding a goldsmith or silversmith. Handicraft goods. Now, this is one most desired and required exemption. As I gave example of this Hampi toys, or we have say Rajasthan marbles. Now, every state have a peculiar handmade goods. So these handmade goods, if it is supplied interstate, it was mandated to register. So this notification 8 of 17 says, up to a threshold limit specified under 22, you can enjoy to not to pay GST or not to register if you are manufacturing this handcraft goods. Up to section 22, so I have written by mistake 20 here. Please read this as section 22. Any threshold limit up to section 22, I can make an interstate supply without registration. For what? Handcraft goods. They have given a specific direction. What do you mean by handcraft goods? Goods where machining can be done, not predominantly up to basic requirement, a machining activity can be done. Using a PAN, e-way bill can be generated where the value of goods is exceeding 50K. If the goods are exceeding 50K, e-way bill can be prepared using your PAN number. Similarly, a casual taxable person is also exempted from registration if he is supplying this handicraft goods, which is an interstate supply. Now, this is one notification, 10 of 2017. Please write down in your work notes. Most of you, once you get qualified, you're all going to be future chartered accountants. Once you register under GST, question comes here. Section 24, compulsory registration. This notification comes and gives a rescue. Look, if you are making a service, if you are making a supply of service, which is interstate supply, up to a sum of rupees 20 lakhs or up to a sum of rupees 10 lakhs, you can continue to enjoy the exemption. No need to register under GST. Rather, you can supply the services up to 20 lakhs or up to 10 lakhs. Like assuming you qualify afresh, you start your practice in the state of Rajasthan. From Rajasthan, you do a stock audit for one of your client in, say, UP. This happens to be a interstate supply. Assuming you have a total turnover of 6 lakhs. Though you are within the threshold limit, you can enjoy exemption. You can enjoy your exemption by virtue of not to register using this notification 10 of 2017. I repeat. You as a service provider, you can make any interstate supply of services. No need to register. Though section 24 talks about compulsory registration, you can enjoy exemption up to a sum of rupees 10 lakhs or 20 lakhs based on the state where you are registered. If you are in Rajasthan, 20 lakhs is a threshold limit. If you are in the states of MMNT, then 10 lakhs is your threshold limit. Here, Manipur, Mizoram, Nagaland, Tripura. If you are any of these states, then 10 lakhs is your exemption not to register. Now, there is one more notification, 65 of 2017, where it says, if you are making any supply of services through e-commerce operator. Now, please remember students, the root for all these discussions is Section 24. Section 24 is a culprit. I would say it is a culprit. Mandatory registration. When we read these tax laws, always we question, so why is this provision was made in this fashion? Why is this Section 24 required? When Section 22 says 10 lakhs, 20 lakhs and all. Now, this is a policy matter. This is a policy matter. Like, just to give an example, when we read Section 10, composition, ice cream is a person who supplies ice cream is not permitted to do business under Section 10. Now, one of the business got irritated. Look, 1 crore 50 lakhs is there under composition. I can very well right, left, center. I can enjoy to pay tax at the rate of 5%, not to charge 18%. Very easy to comply. A lot of ease of doing business is there. Now, one of the dealer challenged in a Delhi High Court, saying that, sir, when you read Section 10, it says a person who is doing a business of ice cream is not permitted to register under composition scheme. Is this not impartiality under Article 19? Article 19 is your fundamental right of doing your business. There's a curtailment of doing your business activity. So this particular hotelier challenged in the Delhi High Court. Delhi High Court saying, look, this is a policy matter. Central government with the Union of States, where there is a GST council, 3/4 majority decision is taken in the council. It is a policy matter. When it's a policy matter that government doesn't want to give a relaxation, as a court, I cannot interfere. So that's how these tax laws are framed. So any act which is approved in Parliament, upper house or lower house, and enacted as an act, you cannot challenge few things in the court of law. Again, it doesn't mean that it is a dead end. There are few articles like Article 155, Article 226, sorry, not 220, 355. There are few beneficial provisions where your benefit is deprived by way of a law. You can very well challenge in the court of law. Like one of the example, in the interest of public to do so. So if you make an amendment without consent of a public, without interest of a public, that can be very well challenged in the court of law. This is what we need to understand. So here, e-commerce operator. Any supplies through e-commerce operator, mandatory registration at 24. Again, this notification says any services up to a sum of 20 lakhs, services up to a sum of 10 lakhs need not register under section GST by virtue of 65 of 2017. This is an old amendment. Please keep in mind, this is talking only about services. Question comes, what happens to goods? Till October 2023, any supplier who is supplying goods through e-commerce operator, it is compulsory to register under GST. Any service provider who renders services through e-commerce operator, he enjoys a threshold limit up to 20 lakhs and 10 lakhs under GST law. Now, this is one amendment which happened in recent October 2023. I'll come to that notification in a short while. This is the notification I was talking about. No, this is in relation to exclusive supply of goods. This we have discussed already. I will skip this. Yeah, this is a notification. Very, very important. Applicable for your May 2024 attempt. I would say this is a path-breaking amendment in business. Path-breaking amendment. Reason, services by virtue of 10 of 2017, all along we were enjoying. Any goods supplied through e-commerce operator by virtue of 34 of 2023, this is applicable from 1st October 2023. Though the amendment came in July, this was enacted from October 2023. What it says, any person who is not registered under GST, though under section 24, any person who supplies goods or services through e-commerce operator, there is a compulsory registration. This notification 34 of 23 says that, supply of goods through e-commerce operator whose aggregate turnover in a previous year or current financial year does not exceed the limit of 10 lakhs or 20 lakhs in a financial year, he is exempted from not registering in GST law. Conditions. What are the conditions? Point number 1, should not make interstate supply. Point number 2, person should not make supply of goods through another e-commerce in another state or in the same state. One supplier, only one e-commerce operator, he can supply. Another e-commerce operator, he cannot supply. Like example, say Mr. X, who is an individual, he wanted to supply his goods through Amazon. He cannot again go and enroll himself on Flipkart. He is permitted either on Amazon or allowed on Flipkart. So one supplier at a point in time can supply only through one e-commerce operator. So what happens if he stops his supply through Amazon? Stop with Amazon, get enrolled and registered with Flipkart. So for doing a business, they say, Baba, you should have PAN. Now government wants to have a control. Now this amendment, why it has come, when you try to examine this digital platform has opened a plethora of operations to MSME business. There was a huge representation by e-commerce operator to the government saying that, I'll give a very, very basic example. Let's take example of agarbatti. This doop stick, which is an incense stick. Most of the Hindus, as a traditionary custom, when they do a praying offerings to the god, they lit the lamp. Along with that, they also lit a agarbatti. Now, agarbatti business is one of the MSME business where lakhs of small-time individuals have the residence as a place where they do manufacturing of agarbatti. Unfortunate thing, they don't have a reach to a large businessmen because of the business curtailment. If I'm a small individual agarbatti manufacturer, assuming I have 5 skilled men at my residence, every day I manufacture 100 packets of agarbatti. If this agarbatti goes to say X, Y or Z, where a brand gets imprinted, I sell at 40 rupees. The brand, the fellow who's having a brand in the market, he sells at 80 rupees. Now look at the marketing. Individual fellows who have capacity to manufacture, who have no identity, are deprived to get registered or supply through e-commerce operator. If at all, if I make an attempt to sell through e-commerce operator, because of non-existing of this provision, I was mandated to register under GST. Now look at my plate. Every day I manufacture 100 packets. Each packet is worth say 40 rupees. 100 into 40, 4,000 rupees. 4,000 into 20, 80,000. For a small business of 80,000 in a month, getting registered in GST, issuing a tax invoice, making a supply, making an e-way bill, it is going to be a nuisance. Now to get away from these hurdles, this notification was brought in. All these small-time business people, they can register under e-commerce platform, sell their goods on e-commerce platform. Conditions. Point number 1, he shall not make interstate supply. Only within the state, he can make a supply. Point number 2, not to make a supply of goods through e-commerce in more than one state or union territory. I can sell only within the state, not in any other state or union territory. I should have a PAN. Based on PAN and address, there should be a validation done on e-commerce GSTN portal. Based on my PAN validation, I get something called enrollment number. Using this enrollment number, I will be making a registration on e-commerce portal and I supply the goods. Only one enrollment number is available in the state. And this enrollment number is compulsory to make a supply through e-commerce operator. Now, moving on to compulsory registration. What are the scenarios where Section 24 overrides Section 22 and says you need to compulsory register? Person making interstate supply. By default, all these examples I gave earlier, if you make any interstate supply, you are mandated to register under GST law. You are mandated to register under GST law. Casual taxable person. If I am a CTP, irrespective of 10 lakhs or 20 lakhs, register under GST law. Persons required to pay tax under reverse charge. Now, this is a big hurdle for agriculturists. All this was set aside because of Section 23 amendment. Persons who are supplying, like I gave example of e-commerce operator for services for goods. So all along, services were exempted up to 10 lakhs or 20 lakhs. This, by virtue of amendment in October 2023, even goods continue to enjoy up to a threshold limit of 10 lakhs or 20 lakhs. NRTP mandatory registration. Person who are required to deduct TDS or TCS. TDS under Section 21. All your public sector undertakings or local authority, state government or central government. Using a unique identity number, no need to have a PAN, you can register under GST, obtain the TDS. Persons who collect, persons who make taxable supply on behalf of taxable person. Agent. Input service distributor, again mandatory registration. E-commerce operator, TCS, concept of TCS. Any e-commerce operator who operates a platform where he is compulsory obligated to collect something called TCS, he is mandated to register under Section 52. Or any supplier who supplies goods or services through e-commerce operator exceeding 10 lakhs or 20 lakhs need to get registered under GST. OIDAR, Online Information Database Access Retrieval Services. You have this Amazon or Netflix. They are supposed to register under GST and pay GST if they give services to non-government or non-business person. There's a compulsory registration. Now, this is again one another amendment which came in October 2023. October 2023. Online gaming. May 2024 students, wait and watch one question with respect to rule number 32, 32B, 32C, which talks about your online gaming activity, or with respect to compulsory registration under Section 24, where they say every person supplying online money gaming from a place outside India to a person in India. Such other person or class of persons as may be notified. These are the amendments which are applicable under Section 24. Let me see any doubts before we go further. So far, so good. Now, this is a slide I just brought in from input tax credit point of view, ITC point of view. Arun Chajazar has covered topics on input tax credit. When you read this Section 22, Section 23, Section 24, and other sections, there's one section called Section 18, which deals with your benefit of input tax credit when you take a registration first time. When you're a composition dealer, migrate from composition to regular, or you're a registered person, all along you're dealing with exempted goods or services, all of a sudden those goods or services become taxable. How the benefit of input tax credit needs to be availed for a person who takes a registration on the day prior to the registration, whatever closing stock you have, on that, how do you take the benefit of input tax credit? Or moving a person from composition to regular. All these aspects are covered under Section 18. Now, Section 25 onwards, it's all procedural provisions. I'll just students, we are at 8:56. I'll take maybe a best another 10 minutes, where I'll quickly run through all these procedural provisions. Not much to worry. Conceptual part we have discussed. This is all procedural aspects. Procedure to register, they say within 30 days from the day you are liable to register, within 30 days, apply for registration. In case if you are a CTP or NRTP, at least 5 days prior to commencement of business. Examination, 1 mark MCQ, you can test this question. When I'm liable for, say, 1st April 2023, I received an advance for 30 lakhs for service. Now, I'm liable to register on 1st April 2023. As per this section 25, on or before 30th April 2023, I need to apply for registration. Why? Because I'm liable for registration on 1st April. In case of a CTP or NRTP, assuming Diwali, I gave an example. Say 30th October 2023, you start your business. They say 5 days prior, on or before 25th October 2023, you need to register and start your business. In case of a SEZ, they say, please identify a domestic DTA and SEZ unit separately. Though you have same PAN under income tax, for DTA, take a separate registration. For SEZ, take a separate registration. In case of supply from territorial waters, the provision says that wherever there is a supply, find the nearest coastal state or union territory and take the registration in that particular state. Example, Kakinada or say Trivandrum. No, not Trivandrum, say Kochi. Where there are territorial waters. When you make a supply through territorial waters to a vessel, say supply of spare parts, etc., find the nearest state or union territory and get registered yourself. Single registration in a state, you will not be generally given a multiple registrations until there is a specific requirement from the registered person in that regard. Voluntary registration, section 22, section 24. Though you're not covered under 22 or 24, you may take a voluntary registration if you want benefit of input tax credit, or maybe for business purpose. The term distinct person was covered under section 25 in relation to schedule number 1, in relation to section 15, valuation, rule 28, valuation. So all these aspects of distinct person having same PAN, for cross charge or stock transfer. For that purpose, you will be called as a distinct person. PAN is compulsory for obtaining a registration. Exception to PAN, section 51 TDS, you need not have a PAN. You'll be given a unique identification number because you're a public sector undertaking. Or assuming you are a local authority, without PAN, you can get a registration under GST law. And for registration, Aadhaar authentication is compulsory. 2022 point in time where there was an amendment to GST law to control your fake registrations, Aadhaar authentication was made compulsory. For Aadhaar authentication, they have identified in case of a business, Karta, managing director, whole-time director, partner, member of a management committee, trustee of a BOT, authorized representative, authorized signatory, or other persons. These are the persons who are authenticated to authenticate themselves on behalf of a person other than an individual. Exemption from Aadhaar. Government has a power to notify some authorities. As of today, they have notified a person who is an NRI, not a citizen of India, government undertaking, central government or state government, local authority, statutory body, PSU, or a foreign representative like your WHO, WLO, UNO, etc. So what happens? I applied for Aadhaar. My Aadhaar number is not yet allocated. On the basis of enrollment ID, on the basis of PAN, passport, voter ID, etc., I can apply for Aadhaar authentication as a registration. These are all Procedural aspects, students. In case if the person is failed, like taxable person, I gave example of a taxable person. Person who is liable to register but not register. In that case, the proper officer obtains the registration for that particular person. For what? For collection of GST. Unique identity number shall be given to these special organizations for the purpose of claiming a refund under GST law. Now, any amendments to your registration, like from the date you are liable to register, registration certificate will be issued from the day you are liable to register if the application is filed within 30 days. I give an example, say 1st April 2023, you are liable to register. You file your application, your time limit under section 25 is 30 days, that is 2023. Scenario 1, I file my registration on 25th April 23. Scenario 2, I file application on 5th May 23. The provision says that if you are made your application on 25th April 2023, from the date you are liable to register, that is 1st April 23, your registration is applicable. It is effective. Suppose you applied your registration after 30 days, your registration is applicable from the day you applied for your registration. That means to say, my effective date is on the basis of date of filing my application for registration. Procedure for registration. Rule 8 says that you have to display your registration certificate in a prominent place. If not, under section 125, penalty of 25K is applicable. Display your GST registration certificate. Also mention your GST number on your name board. So what if I have regular registration? What if I have ISD registration? Display both the numbers on your name board. Generally, it so happens that I have one registration. Wherever your name board is there, XYZ Private Limited. Below, mention your CA number, mention your GST number. Deemed registration, a registration granted by a state or union territory, deemed that central government also granted for registration. CTP, NRTP, casual taxable person, non-resident taxable person. Very simple. It says 5 days prior to commencement of business, file an application. Once a registration is approved, you will get a validity for 90 days. Suppose if I want to continue business beyond 90 days, the officer will give extension not beyond further 90 days. And as a CTP, what I have to do, whatever amount of tax I anticipate I have to pay, deposit that particular tax through electronic cash ledger. I say that assuming 10 lakhs is my turnover, 12% is GST, to 1,20,000 is the amount. So whatever estimated turnover is there, on that estimated tax amount, deposit at the time of registration. This is for CTP or NRTP. There are various forms for your registration. When I file my registration, these are the forms I select on the basis of my nature of business. Any changes, like I change my address, my principal place, additional place of business is changed, my principal place of business is changed. All those amendments within 15 days from the date effective, you have to go to the GST portal and make an amendment. Whatever amendments are done, that will be approved by the proper officer within 15 days. In case if the officer is willing to reject, you have to, you get a show cause notice, and within 7 days, you make a reply to the show cause notice. And in case I made an amendment, within 15 days, proper officer has not issued a show cause notice. It is deemed that your application is approved. Or I received a show cause notice. I made a reply to show cause notice. Proper officer not took any action within 7 days. It is deemed that my certificate of registration is issued and amended to that particular extent. Cancellation of registration. Cancellation. I, as a registered person, file an application. Sir, I have stopped my business. There's a death of a person. Then his successors can file an application. Or proper officer suo motu can cancel the registration. Why proper officer cancelling registration? probably you have contravened any of the GST provisions. Now, what are those contraventions? One, probably I did issue an invoice fraudulently. They have cancelled my registration. I am a registered person under Section 10 composition. 3 months consecutively, I failed to file my Form 8 GSTR4 or CMP08. CMP08 is my quarterly return. Then my registration will be cancelled. If you are a regular registered person, 6 months I failed to file my return under Section 39. Your registration will be cancelled. You have done any of these activities of fraud, willful misstatement, or suppression for obtaining registration, again, your registration will be cancelled. Recently, there was a registration drive where thousands of registrations were cancelled because there was no business carried out at that particular premises. Because you took a registration by means of fraud, your registration will be cancelled. Just because your registration is cancelled, whatever liability you are supposed to pay, they say that it continues. Just because you are cancelled, your obligation to discharge that liability does not cease at that point in time. Till you pay the taxes, you will be considered as a person liable to pay the tax due thereupon. On the date of cancellation, on the date of you surrender your registration, look at your inventory. Whatever inventory is there on which you have availed input tax credit, stock on which ITC is availed, that particular ITC you have to debit either in electronic cash ledger or electronic credit ledger. Through electronic cash ledger or credit ledger, you need to pay tax on the stock on which ITC is availed. Similarly, in case of capital goods or plant and machinery, you have section 18 read with section read with rule 43, where they have given a formula how you identify your input tax credit needs to be reversed in relation to capital goods or plant and machinery. Again, rule 21 prescribes some of the modus operandi why and when your registration will be cancelled. Sir, I have taken registration, but I am not conducting business. Or invoice or bill is issued in contravention to GST law, like fake invoice. I issued an invoice without supplying goods, or I gave a bill without supplying services. Anti-profiting, as on today, not relevant. I took a registration but not gave bank details. Again, my registration is liable to be cancelled. Availment of input tax credit, fake invoicing, your registration is liable to be cancelled. Your input tax declared in GSTR1 is higher compared to liability in GSTR3B. There are suppliers who are very, very intelligent in doing a business. They give a tax invoice, they declare that in GSTR1. But in GSTR3B, they don't declare that particular tax invoice. Assuming for a moment, as per GSTR1, 25 lakhs is the value of supply for a particular invoice. In GSTR3B, I just declared 2 lakhs as my output tax. Now what happens here? GSTR1 is filed, GSTR3B is filed. But when I compare both, for the purpose of enabling the input tax credit to the recipient, I declared turnover of 25 lakhs. But while paying tax, only on 2 lakhs, I declared the turnover and paid my tax. Even then, my registration is liable to be cancelled. Rule 86, where there is a limitation of input tax credit availment. Arun sir would have touched upon, where I have 99% eligibility to use input tax credit from electronic credit ledger, and cash ledger, I have to pay balance 1% output tax. If I violated this condition, again, my registration is liable for cancellation. This we have discussed. These are all procedural aspects. Revocation. Revocation is a procedure where, students, bear with me, another 2 minutes, we are going to wind up the session. Register person, once his registration is cancelled, he can apply for revocation. What is the time limit for revocation? Generally 90 days. Recent amendment in October 2023, August 2023, this amendment came, wherein the time limit beyond 90 days is extended up to 180 days. So what happens if my registration is cancelled? Then, like assuming there is a revocation of my registration, then after revocation, the day, the period from the date of cancellation till the date of revocation, assuming July 2022, my registration is cancelled. Say October 2023, this is cancellation, this is revocation. In case if my registration is cancelled in July 22 and revocation happened on October 23, the period for this, my returns should be filed within a period of 30 days from the date of revocation, from October 2023. That is, before November 23, all the returns due for this particular period, I should file after a revocation. This is a new amendment which came in recent August 2023. This is the last slide, students. From examination point of view, wait and watch for 4 marks, computation of aggregate turnover, read with section 22. Then how to apply threshold limit from schedule 3 transactions point of view, where I gave some of examples. Examining CTP provisions, MCQ question. Compulsory registration under section 24, read with amendment of section 23. Please wait and watch compulsory 1 4 marks question, recent amendment which happened in October 2023. With this, we come to the end of our discussion. Thanks to all of your patience. I spent beyond 13 minutes. In today's discussion, we meet again with the next topic called tax invoice and debit note under GST. Good night. Goodbye.